Today is Saturday, January 25th, 2025, and there's actually a lot of stuff for me to get into because I haven't posted a video in I think a week, and there's been a lot of things happening this week. I don't know if I'll be able to get to everything, but hopefully I'll remember most of it. But the first thing I want to talk about is me hitting 140K for the first time. So I believe Friday was when I hit 142. I actually don't really know how to feel about this because I remember, I think it was November, I hit 100K for the first time ever. And from that point, I'm already up another 40%. Like, November was not that long ago. It's January right now, so that's about 2 months ago. I'm up 40% in my account. And obviously, I'm happy about it. And $140,000 to me is a lot of money. It makes me a little nervous about the future of the market and perhaps even some stocks that I own. Anybody that has been watching my videos for a while now will know that I've had the price target of $50 on Robinhood for a while now, even on those pretty scary days where I believe Robinhood would dip to the 30s or something, and I would still tell you guys I think this is a $50 stock. And sure enough, let me check. Yep, it closed out at almost $51 on Friday, but I believe it went even higher. Yeah, so it tagged 52, but it closed out at around 51 on Friday. And of course, I'm happy that it hit my price target, but I'm starting to see some behavior that reminds me a lot of 2021 when we had all of those NFTs and people were paying crazy amounts of money for pictures of rocks and like the whole DeFi wave with all these games coming out or whatever, like games on the blockchain, right? And people were pumping up those prices. Everybody thought that they were some NFT guru, whatever. And it seemed like almost everybody was into meme coins and all that. And I've been seeing some familiar behavior lately, behavior that resembles 2021, because it seems like everywhere I go, I hear people talking about this Trump coin, all of these companies saying that they're going to issue debt and buy Bitcoin or whatever. Solana is going to the moon right now. And of course, XRP. And I almost forgot, there was some news I saw about Rumble. I didn't get a chance to read a lot of it, but I think Rumble and Tether have some kind of a deal, and I thought that was pretty interesting. So there's just been too much excitement of crypto lately, and another red flag that I did see, specifically on Robinhood, as a Robinhood user and a shareholder, I've noticed that whenever a coin gets listed on Robinhood, it's usually because, let's just say, people are looking for some exit liquidity. Now, if anybody here doesn't know what exit liquidity means, it means people that were early into buying something are looking for sellers towards the top, right? And if you want a lot of people to be able to get out at a specific price at the top, at a really good price, you need a lot of buyers at the top. And I've noticed a little bit with XRP, how XRP used to not be on Robinhood, but then it got listed, and this whole Trump coin craziness, whatever, and it's just a lot of red flags. Now, this doesn't mean I'm going to sell Robinhood stock or sell any of my stocks, but I'm just going to kind of play it cool. I did sell one covered call on Palantir that I'm already up about $30 on. But if we take a look at my all-time chart, it is parabolic. Like, it was already parabolic. This was when, towards December. But now we're just on another leg up. And like I said, I'm very happy about this. But at the same time, I'm a little bit scared. If we look at my year-to-date performance, I am up 18.48% already for the year. I mean, most people would be happy with 18% for the entire year, and I got that in 1 month in January. And to compare it to the NASDAQ, it's only up 2.6%. So I'm still going to carry on doing what I do, just constantly looking for opportunities, whatever, but I'm going to try to look for some hedges. And I know I said that before, and the market dipped a lot, my account dipped a lot. And I said that I should have hedged more, but I'm probably going to force myself to really look for some hedges this time. The other thing that I wanted to quickly mention before I forgot is Sofi. So I still think Sofi can see $20 a share. And if I'm not mistaken, they report earnings next week on Monday. And I'm still confident in the company But my stance is somewhat the same even after this huge bump up in the stock price. So if anybody has seen my older videos back when SoFi was, I don't know, maybe $7, $8, $9 or something like that, I was talking about how disappointed I was at how slow the company was moving when compared to other fintechs like Robinhood. And I know it's not a fair comparison because SoFi is a digital bank and Robinhood is a brokerage, and SoFi likes to focus a lot more on the banking aspect of things, while Robinhood is obviously a brokerage and they're also getting heavily into crypto. So they focus on different things, but they're still both fintechs. And even though my patience with SoFi has definitely paid off, I will still be disappointed if they are still slow to release new features even under a different regulatory environment. Now, I don't like getting into politics too much, but I could somewhat understand if under the last 4 years they were kind of hesitant to really push out and do anything with all the student loan uncertainty and all the regulatory uncertainty with the antitrust and all that. I can totally understand why they would be cautious. And also with the Fed, they were cutting interest rates and all that. So they were being conservative, and I understand that. But getting into this new environment where most likely there will be less regulation and more opportunities for them to expand, if they don't take advantage of that, and by take advantage of it, I don't mean take on great amounts of risk. What I mean by that is releasing new features and improving the app and the service to customers. If they don't take advantage of that, then I might have to reconsider my position in SoFi. And anybody that follows me on X would have also seen a brief conversation I had with another account about this topic specifically. And it seems like a lot of other people are also feeling the same thing, where if SoFi really doesn't show what they got in these next 4 years, then definitely I might have to reconsider my position in SoFi. But at the same time, it's still a really small position. If we take a look, it's only $9,000-$10,000 for me. So, I mean, $10,000 is a lot of money for me, but at the same time, it's not that big of a deal for me to quickly sell it. The other two stocks that I wanted to talk about briefly were Burberry and EA. So EA, I believe they started tanking because they're expecting slower growth or even decline in some of their video games and services. I didn't get a chance to read too deeply into it, but basically they're struggling a bit right now. I think EA is good as a whole for me right now because it's only $1,000 for me, and I'm only down like $200 on it. I think for me, I'm going to just hold the $1,000 that I have in EA right now until I can look a little bit deeper into their future plans of what they have stored, of future games and products that they have coming out, because they have amazing titles. It's just in the short term, it seems like a lot of customers are disappointed and they don't have a lot of hit titles, if that makes any sense, and they're seeing decline in their business. I think buying EA right now would result in me having a lot of opportunity cost and too much money tied up. So like I said, I'm going to give EA a second look and decide what I want to do from there. But the other stock that I wanted to talk about was actually Burberry. So if any of you guys remember a long time ago, I was actually down like 50% on Burberry or something crazy like that. Because my cost base is around $15.43, and I believe I took a loss. I was tax loss harvesting, and I think I sold a little bit more at around $9 or $10 a share. I did end up losing a little bit more than the $168 that it says on Robinhood. This stock has been on an absolute tear lately, 21.58% year to date. Past 3 months, it's up almost 45%. Past 1 month is up almost 20%. So it's been on a run. Or I'm sorry, past week it's up almost 20%. And even though it's a bit unfortunate that Burberry is now starting to pick it up after all of these months of opportunity cost and me having money locked up in it and taking a little bit of a tax loss, I do think in these next few years, consumer stocks will be interesting because China is stimulating right now, and that might be part of the recovery story of Burberry. I'll have to do a little bit more reading. But I do think a lot of consumer stocks like Burberry and Nike will do fairly well these next 2 years. So even though it sucks that I've had so much opportunity cost locked into this stock, I am happy to see that my 50% loss is now only a 5% loss. And just to show you guys some of my recent activity here lately, I did end up paying a huge interest expense, but that was completely covered by my covered call selling and cash secured put selling. So a lot of my option income did cover the margin interest, and I even had some money left over for a profit. So I am happy about that. Also, all the dividend income I've been making lately. I also closed out my Nike put. And if anybody remembers my original Nike put, I did sell it for $104, but basically 103 after fees, just to make it simple. And then I ended up rolling it for another almost $8. And then I closed it for 45, so I did make a decent profit there. And then, of course, I ended up buying some more REPX. And also, I sold a covered call on PLTR. So as for Palantir, do I think it's a buy or a sell? And part of the reason why I made this decision to sell a covered call on Palantir is, number one, I have no interest in selling my Palantir shares, especially because I only have 200 in my Robinhood account. But at the same time, I recognize that it's pretty richly valued right now, and they're about to have earnings coming up. So I just thought, man, if it ends up hitting that price, which was 110 on February 14th, then I might just have to let it go at that price, because that is just a ridiculous price. But of course, most likely it won't end up hitting 110 and I'll just collect another $100. But I think if I'm forced to sell Palantir at $100+, I'm not going to feel as bad about it, if that makes any sense. And as for REPX, I have been seeing some pretty good setups on energy stocks and the energy sector in general. But at the same time, that also kind of scares me, because if I see a good setup on energy stocks, does that mean oil goes up and cost of living goes up, and we kind of have like this panic again? These last few times where the market took a little breather, I think energy was one of the few sectors that actually held up. So it's almost like energy is acting like a flight to safety a little bit, which is kind of scary. So if I'm seeing a good setup on energy stocks and the energy sector in general, maybe that means the market goes down. I don't know though. That's just something that I'm keeping in mind. But yes, I do see a good setup on REPX, and I did buy a little bit more. Now, I know this has been a pretty long video, and if any of you guys have watched the whole thing, please let me know in the comments, because I appreciate you guys. But the last thing I want to talk about was, recently I was contacted by Robinhood to give my brief thoughts on what I like or don't like about Robinhood, what I think could be better or whatnot. But the three things that I gave them were, number one, something that I've been talking about for a while now, which is more transparency on the fees. And any of you guys watching this right now that has been trading options on Robinhood, you might have also noticed that it will say regulatory fees of like 3 cents, but in reality, it's more like 10 cents. And that also isn't accounted for in the realized P&L section. And the second thing that I gave them was, it would be really cool if when I'm selling covered calls, I could actually select which lots of shares I want to put up for collateral. So if I want to sell my long-term capital gains shares, that I could do that. Or if I want to select the lots that are at a higher price, higher cost basis, I could also do that. So it'd be really cool to be able to select which shares I want to put up for collateral. And the number 3 idea that I gave them was more community engagement in terms of updating the data on Robinhood. So I haven't been paying too much to the information that is on Robinhood, because I typically will use other websites like TradingView or Seeking Alpha for this. But for example, if I go on Pepsi right now, it'll tell me that the dividend yield is 3.57%. And I don't know if that immediately updates whenever they increase or cut their dividend. So I thought it would be a cool idea if we could have community involvement in terms of updating the news and data on the Robinhood platform, which would not only increase user engagement on the platform potentially, but it would also save them costs on buying data and hiring more people. And you could also do something where only people that are on the Robinhood Legend desktop platform are able to submit requests or whatever for data updates, and then people can vote up which ones are most accurate or whatever, just so that it doesn't complicate the mobile app too much. And of course, I don't think most people that use the Robinhood mobile app are constantly paying attention to the news and whatever. Obviously, people that are on the desktop platform on Robinhood Legend, they are typically much more serious traders, whatever. They have much more free time, so they can update that data as it pops up.